Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling of KD Investors, and we are seeing a lot of red across the board in both grain and livestock futures. Feels like a risk-off day here. It started in the grains, and now it's kind of spilled over into the livestock. And talk about what's kind of precipitating this today, Kevin.
Well, there's a lot going on. I mean, at the start of everything, I guess the pretext to every day is we're in the midst of a kind of a global economic collapse, and so that's our backdrop. And then the agriculture markets have to trade against that, and with the inflation expectations coming in a lot higher than expected, you get a big negative day in the stock market, and then excuse me, and then yesterday, as we know, we had the corn breakdown technically, and that ran a bunch of stops and spooked people. You've got the funds long corn, they're long soy, and so you've got them scaling out of those a little bit. You've got option expiration as well, which we can get some strange movements on those days, and they're strange isn't the right word, but just kind of violent, and can snap back later. But
right.
Overall, yeah, it's like I say, it's a macro risk-off day. So
yeah, it is a risk-off day for sure. The corn market here, technically, like you said, did not have a good day yesterday. We really need to hold support here today, don't we?
I was just publishing some longer-term charts on that, and you can actually make a case where things are okay as long as we don't technically close down below that that 650 support
650,
zone,
yep.
655 in the May. So there's a whole bunch of lows down there a month ago. And if we can stay above those and catch, I can make a case where that ascending triangle remains, and just on a longer scale. But if that gives way, it's going to look pretty ugly. And normally we joke when we talked, I think last time on the show, we talked about that triple top that was there and they never hold, and so we could expect something good out of that. And maybe this is one of the rare times where it holds. It certainly could be.
So. Yeah, let's hope so. Soybeans, obviously, we haven't done much technical damage there. That market has kind of felt like we've been in consolidation mode most of the week here because we couldn't take out last week's highs. But what do you think we're trading today? Is it just money flow again or not?
I think so, right? If money flow and fund exposure, and you've got the funds, I mean, we don't know really where they're at. I mean, the commitment of traders reports, those are kind of out of service for who knows how long. And I didn't put a whole lot of faith in those anyway, but they did show pretty big longs there. Yeah. And so, but at the end of the day, exports were good. I mean, we're still over double the pace needed on soybeans week to week, and Brazil's shipping as well. We had the Argentina frost, and you wonder, you just wonder what Brazil's capacity is for moving ahead. And maybe we're going to see, well, we don't really have room to see big exports beyond that. So we'll see what happens.
Yeah. Okay. So wheat has also done some technical damage. We're going to have lower weekly closes this week. And I know we've received some precipitation in some of these HRW areas, which may also be a contributing factor. And then today we've got the dollar back up. So that's also a factor, isn't it?
It is. Yeah. And the dollar, it looked from a technical standpoint, the dollar looks like it's starting to run out of steam a little bit and should top out in that 106, 108 range, but that's still a high dollar, still a little bit intrusive for what we want for as grain producers. So, with wheat, it's a tough one. Like we talked before, it's, we've extracted more war premium than what we actually put into this market. So,
right. We're below the levels that we were before the war erupted, right?
Right. And so you question, you question the importers, they hand to mouth, they're not buying anything ahead. Are they going to, is that a wise move, or do they know something we don't? The Chinese came out yesterday with their big statement on the war, saying that, they would promote peace and they want the extension of the grain corridor. So all that sentiment just adds up in ways between the corn, between that sentiment, between the risk off, and you put it all together and you get days like today.
Yeah, absolutely. Although it's hard, you scratch your head a little bit with the fact that, stocks are tight, lowest deliverable stocks in a very long time, right?
Yeah, both the hard red winter and the hard red spring are that way, and the hard red winter, the deliverable stocks are about the lowest in, gosh, I don't know, 10 or 15 years at least.
Wow.
So you wonder, and then the new crop is, gosh, the producers are getting blown off the planet down there. So that's all going to come into play. It just, what's going to spur it? That's a good question.
Right. And that's kind of rolled over now here into the livestock sector, which started off stronger today, obviously reacting to maybe the pullback in the corn prices, as well as other strong fundamentals that keep pushing the cattle market. But you got to argue the cattle market was probably due for a little profit taking here, don't you think?
Yep, certainly was. And any day that, and that's been my concern all along, is that, yes, it's bullish. Yes, we should see great numbers, great prices in the cattle sector, but will we hit, our full potential given, kind of this global economy the way it is? And you get days like today where everything's headed lower, and it's going to take cattle down with it. But still, at the end of the day, not enough numbers. People are, buyers are trying to buy ahead 5, 6, 7 months and trying to take the risk out of it. So it's a good season for that. At the same time, I will say, at a producer yesterday, we were looking at put options, and, you can go clear out to October and buy some put options and lock in some great numbers. So just from a global econ standpoint and risk management, look at that. And I'm not a broker. I'm not, I don't make money if I sell options. I don't. So it's just worth looking at.
Definitely, but some good advice there. And it's been interesting that we haven't seen more hedge pressure in the cattle market. So maybe we're seeing just a little inkling of that too. All right. Thanks so much. Kevin Duling joining us with KD Investors. And that is Markets Now.